Here are a handful of different places to plant your money to establish a money tree, also known as passive income, meaning you don't have to be present to generate the income. Your money will work for you. This video will highlight your money tree's rate of growth in comparison to alternate money trees. What's important here is the power of compounding interest. So the money trees we will focus on are your typical savings account, a high-yield savings account, the S&P 500, an alternate index fund that competes with the S&P 500, and one single lucky stock pick. I'm intentionally not looking at college or retirement money trees. The trees listed here all have something in common. They allow access to your money at any time with little to no penalty. For each of these money trees, we will have the same amount of money to plant and then see how the money's growth potential looks. The significant factors that dictate the rate of growth are the annual interest rate and the compounding frequency. Since the compounding frequency will be the same for each money tree, the only difference will be the annual interest rate. Using Excel, I was able to generate this chart from the table above using Excel's compounding formula. As mentioned, the only difference is the interest rate between each money tree, which is shown here. The key observation is to understand the choices you have that can limit or accelerate the growth of the money tree. This chart is capturing total account balance given an initial $500 starting point with $50 monthly deposits over a 10-year period. The power of compounding cannot be realized at very low interest rates, such as those associated with a typical savings account. The chart indicates this by depicting a fairly straight line. Given the total investment of $6,500 over 10 years and the total account balance being $3 more, it can still be viewed as a money tree, but with very little compounding growth potential. If you look at the single stock with a 20% interest rate, this line better depicts the power of compounding. Compounding turns a linear line into an exponentially curved line, meaning bigger and bigger gains are made in lesser and lesser amounts of time. Compounding is a money tree fertilizer or growth accelerant. This chart shows the accumulated capital gains. In other words, how much money has grown on the tree over the 10-year time span. And as mentioned, you have access to this money without penalty during any of these years when dealing with these particular types of money trees. To re-emphasize, the power behind these passive income earnings is both interest rate and compounding. So if you have money sitting in a typical savings account with negligible interest and do not have a separate high-yield savings account or individual brokerage account, I hope this video provides helpful insight to further investigate how you can get started with a new money tree. Most people may be hesitant to venture outside of a typical savings account because of risk. So it is important to do your research and maybe even connect with a financial consultant to ensure your goals can be achieved. Given the various money trees we focused on, this is how they can be viewed in terms of risk. Typical savings and high-yield savings have a very low risk to losing your money when depositing it with a bank. The other money trees do have added risks since they are directly tied to the performance of the economy. They are trees that are envisioned for long-term nurturing since economic performance has always proved favorable over a long period of time. And just to remember, no risk, no reward. Here is an example of how to use this knowledge to your advantage if you have kids. Since compounding is highly time dependent, it would be highly beneficial to get an individual brokerage account started for kids. In my case, I have an 8-year-old. So if I put $1,000 in a brokerage account for her at the end of this year, and then deposit another $500 at the end of each year starting in 2025, I would have a total investment of $6,000 in 10 years. but have an account balance of over $9,000 for her to continue growing. Now that will be a great graduation gift for her. Theoretically, money trees do exist in life. The key is to learn about them sooner than later because they need time to develop and grow before you can significantly benefit from their harvest. These trees have been around for centuries for economies to thrive. If not already, learn as much as you can about the various money trees available for you to establish a meaningful passive income value stream.